You've done a great job of documenting the process. I looked at your YouTube channel. It's like 100,000 subs. A hard part for myself and a lot of people, and I'm sure for you too, is finding good people and then developing them. I think good people are developed into great, but like, how do we find the good? How do you find people? How do you attract people into your business?
That's where I'm at right now, is like building out of it and then just focusing on the things that I enjoy, the content behind it. They're just going out and helping more agents in our space. Like when somebody tells you they tried something and it didn't work, how long did they try it? How much did they spend? How good at sales are they? If you can find somebody that can do something 70% as good as you, then just let them do it.
Welcome to another episode of the A1 Experience. I've got my good friend, somebody that I've gotten to know just this year, Mr. Justin Brock. Welcome, bro.
Yeah, man. Thank you so much for having me. Love being in the studio. I can't wait to see what we do with this big banner behind us.
Yeah, no, for sure. We can make it turn into anything that you want. So, you said you're a Dragon Ball Z fan now. We'll make it Tokyo.
There you go.
There you go. Where
people think we're in Tokyo.
Yeah, where you started your family. So that's
right.
really cool. So, if you don't know Justin is somebody dubbed him, I don't know who it was, somebody dubbed him the Medicare Guru. Justin's an entrepreneur, an author, an innovator in the Medicare and health insurance industry, and really just as an entrepreneur. He's the CEO of Bobby Brock Insurance, founder of MedicareCon and Go Guru. He's landed on the Inc. 5000 list and closed on a $70 million partnership deal, which I'm excited to talk about. Beyond insurance, he's a real estate investor, philanthropist, and someone who's dedicating himself to serving people. Does that about sum you up?
I think so. You did a great job. You did better than me. But yeah, man, I'm just a regular old Marine turned insurance guy that figured out how to make some good money and help a lot of people, I feel like, along the way. So,
well, thanks for your service, by the way, too.
Yeah, thanks, brother.
We were talking about it. You started some of your family in Tokyo.
Yeah.
You were there for 3 years. Tokyo is like the best place on earth. Was there last year this year for the first time, and I can't wait to go back. So,
oh man, yeah, you spent time in like Roppongi or Shibuya or
Shibuya, Tokyo, Osaka for a little bit, and
Osaka's like party central there. So I liked Yokohama a lot. Not to get too far into that, but I loved the architecture in Yokohama. It was kind of like Mediterranean inspired, but in Japan, it was a crazy place for sure.
Yeah. So let's talk. The first thing I wanted to talk about, like to jump like right into it, is you recently sold majority stake of Bobby Brock Insurance.
Yep.
For about $70 million. What went into that decision, and what are some of your goals moving forward?
It was a couple things. We were, the last few years, there's been a lot of regulation passed. You know that. You deal with it, whether it's Department of Labor, FTC. There's all these rules always changing. And for us, it was Center for Medicare and Medicaid Services. Definitely had a lot of new rules, and we were adapting to those fine. But I was like, man, if we have 4 more years of this, I think it might kill the valuation of businesses in our industry because it's going to make it so difficult to do work. And so simultaneously, I'm still getting offers in these, crazy multiple ranges on the business.
Are you promoting that you were selling, or?
It was, our niche was just super, the PE firms were just very targeting, and I had a lot of friends that had sold and were selling. And so I was constantly getting looped into those conversations. And it got to the point where once it got to, I sold 51%. We were valued at around 70 million total, was the total value. And when it got to that point where you're looking, do I do it? Do I not do it? It was just like, this is enough to make sure that my family's set. It wasn't like I wanted to quit working. So that's why I did 51. They actually offered to do 70% of it. Now I did 51 to kind of take enough chips off the table, go back to work, and then hopefully grow the 49% remaining equity to be the best investment they've ever made, and a continuous investment for us. But at least I'm not paying with my wife's money anymore, because that first 51%, that's hers, right? So yeah. I had to lock that in.
Yeah. And then husband, father, we'll talk about those. I love asking, as a new dad, I love asking some of those questions. So we'll get into that. So now that you're still, an advisor in the company, what are some of the things that you've been focused on?
Yeah. It really, it kind of was mentally freeing in some ways. There, you have a private equity partner, so there's always accounting woes and like learning about some of the technical aspects of conversion to from cash accounting to accrual accounting and all that kind of stuff. But short of like some of those woes of dealing with that, it's really been now trying to focus on how do I make this business operate where it could operate without me. Not because I want to leave it completely, but I'm wanting to set it up for success. Because like, let's say I did sell the remaining equity in the business one day and wasn't there all the time. I don't want this entire team that I've built, these people that are making great incomes here, love their job. I don't want that business to suffer because I'm not there anymore. And so I'm finding this rule of like, if you can find somebody that can do something 70% as good as you, then just let them do it. And then you find out that they probably can do it 110% as good as you. You just had to let them kind of go out and fail, give them permission to fail. But that's where I'm at right now, is like building out of it and then just focusing on the things that I enjoy, the content behind it, the just going out and helping more agents in our space.
Yeah. Insurance agents. What is every agency's highest closing lead source without fail? Personal referrals. What if I told you I could help you turbocharge the frequency in which you got personal referrals? In the last 5 years, I've written over 5,000 items and $3.5 million in premium from inbound organic sources, and it cost me nothing. How? Because posting on social media is free. If you want to turn your agency into a referral machine, then go to nicksaka.com/creators and sign up for the Insurance Creators Mastermind, where me and my team will meet with you and your team twice a month to help you with something that no other agency is doing. Imagine having the guidance, the ideas, the trends, and the strategies that actually work in converting more business for your agency. Go to nicksaka.com/creators for more. Now, back to the show. You've done a great job of documenting the process. Like I looked at your YouTube channel. It's like 100,000 subs. Yeah. You've documented your process, your journey. One of the questions that I have, because when you talk about delegating and scaling, a hard part for myself and a lot of people, and I'm sure for you too, is finding good people and then developing them. I think good people are developed into great, but like, how do we find the good? How do you find people? How do you attract people into your business? And I'm pretty sure you're not just bringing somebody in and they're automatically, a leader of some sort. They have to grow into it, right?
Yeah, you find. I mean, some of them are definitely have personality traits that make them, have more leadership potential, I'm sure. But when we started hiring people, this is you know this, like the first couple of people you hire, it's difficult because why would someone want to work for you? It's just, you're just a guy, Once you get to a certain size, it gets a little bit easier to attract people because it feels like a business. And they're like, well, I want a job. I walk in here, there's like we have 52 W-2 employees and a couple thousand 1099 agents around the country. If you walk into my office though now, it feels like a big business, and it's a good culture, a good environment. So people are like, yeah, I could work here. And you have that here. I'm in your office. Like if I came in for an interview, like I'd be like, yeah, I could work here, right? But in the beginning, that's difficult. You have to really sell people.
It's hard even with this.
Yeah, no, I know.
Like you get people and it's just been a challenging. I don't know if it's just a challenging market, but even I don't know if it's just the time, but it's still challenging.
Yeah.
Even after starting out being the guy that why should somebody want to work with me? It was still able to find some of those diamonds in the rough. It could be that I've delegated hiring completely, and then maybe it's just they're not doing it right, or but there's an opportunity there.
Well, but you said it right though. The diamonds in the rough is what you look for, especially in the beginning. At some point there's certain jobs where, like now we rely pretty heavily on disc assessment and dual interviews. So we'll bring somebody in for an interview, and one person interviews them, then they take the disc assessment. If they're a fit on the disc assessment, then the next person interviews them. And some people get kind of weary about relying on something like a disc assessment to rule people out. But once you're not part of it anymore, like I feel like my gut was good, but the further you get away from the owner, the less they need to be relying on the gut and the more they need to rely on the data. So if I'm hiring for an administrative position, they should be a high S on the disc. I need somebody that's stable, reliable. I don't need a high D personality in that admin role. If they're in sales, then maybe I am okay with the D personality, but you can't have too many of those because they clash. So, like starting to kind of let the data do 80% of the work, it's not a foolproof system. It's not like just because they fit the DISC assessment correctly, they're going to do the job well. Because there's also an intellectual quotient. The IQ is like, just because I'm high D doesn't mean I'm smart enough to use that high D personality well. But that has been better for us. Is the further you get away from, employee number one or the founder, the more you rely on the data behind hiring.
Are you just running ads on Indeed? Do you have your own Facebook ads that you create that you're hiring? Like, how do you find your people?
We've done LinkedIn and we've done ZipRecruiter and Indeed and that kind of stuff. Unfortunately, we find that people that are looking for a job are sometimes the worst people to hire. My goal is really through word of mouth to try to steal them away from places they've been a while. The best employees already have a job.
Yep.
And so if you can hire them by paying them a little bit more, like I think we'd all, like sometimes you have an entry, people want to hire this way. They want to hire on a trial, lower base, and then when they work out, pay them more. But if we knew someone was going to work out, we'd all go pay that high amount right from the get-go. Because if you're getting the right person, some people do the work of 2 to 3 other people, right? So if you're getting the person that's going to do that job, job of 3 people, average people, I'll go ahead and pay them more because I'm really still getting a deal because I'm not paying them what it costs to have 3 people.
Are you changing your commission structure to front load it a little bit more, or it's like no, I'm just paying them more?
Our commission structure, what we do is we pay. So if you're hiring salespeople. On salespeople, we've started doing different bases and commissions based on who they are. So there's some people that are really good you can steal away from places that are more salary driven. So we'll offer everyone the same concept, which is low salary, higher commission concept. But then if they kind of kick back at that, we'll go higher salary, lower commission. So for us, it's like, for instance, we might put somebody at a $45,000 salary with 8% of our level as a commission. Whereas somebody that would take 26 or 30 in the beginning, we might pay 20% of our commission. But honestly, lately, some of those ones that took 45 and 8, we've come out better on because that 12% net commission margin has added up. They've probably missed out, but that's okay. That's the difference of being a business owner and taking the risk versus an employee.
Now, when you're offering this, and this is totally not the direction I plan on going, but when you're offering them these positions, sometimes, are you just asking them straight up? Because sometimes I've gotten to where people accept, but then they just fall through the cracks, and I'm like, well, what was it? Why did you accept? If it was like you wanted a higher base, then why didn't you say something? Then we could have worked that out. If you just pay attention to their facial expression or they're just body language and say, well, we do have this,
Most of the time when we've done the higher base, they've flat rejected that other offer in a polite way. If they were an asshole about it, I wouldn't even offer them another one. But most of them have just been like, well, I just really feel like I had to be closer to this to make it work. And so then we'll just tweak it, inverse that, go higher base, lower commission. And most of them take that. We have the structures for us is actually 2-tiered. So we started hiring people where we paid them flat fees per sale plus a base. And then we move them to getting a percentage of the commission, including renewals, once they meet certain standards. But of course, it just depends. Like sometimes you get somebody that comes in and you're an absolute match of what we're looking for, or the experience you have, or the candor, or your relationships. I mean, in sales, especially in direct-to-consumer sales, in all sales, really, if they have a great network, that can be worth its weight in gold. So you get somebody like that, you're going to offer them, a little more. Like we had one guy that came in, he'd been an Outback Steakhouse proprietor for 20 years, and he was a little bit older than most of the people. I mean, when I say a little bit older, he was still in his early 40s. But a lot of the people we're hiring are 28, 30, 32. And he was 43, 44. But I knew he was I just felt like this guy's going to work. He came in a suit. He was so sharp, in comparison to and he had a radio voice. He was the guy. I was like, this is a guy I can send out to networking events. He can represent the company. So we offered him a higher base from the get-go, but it was the level of experience and relationships he was bringing to the table was different. So
right. So there's a question, because this is a question I asked you even in Minect Is that what it's called?
Yeah.
I asked you, like, how do you get a 7 times multiple, on your book of business? And the reason I asked that is because I'm in the captive world, PNC,
Yeah.
and the biggest multiple, and it sounds like a one-off situation, was a guy built a tremendous business, fully remote, for like 5 times, which is pretty unheard of. Like the average a couple years ago was like maybe you get 3.5.
Is that gross book, like gross commissions?
Yeah, like so multiple. So gross off of the gross revenue.
Do they typically buy? Is it so? Is it net revenue or gross revenue, or do they buy the operation, or do they just take the clients?
They buy the operation typically.
Okay, but they'll pay, like, let's say it was on average like 3.5. Are they buying 3.5 before expenses or after expenses?
So the way that I was taught to for this our multiple is the size of the book of business total premium times by the renewal percentage, which has changed over the years. So now it's even lower. So I think, when you were saying like, yeah, we noticed some changes, might as well, I think it's a good time.
Yeah.
Multiplied by that. And then that number is, you multiply that number by the multiple.
Multiple.
Yep.
Yeah. So that's like gross book. So if you get to a certain, so ours was 10x with a 1x earnout, but it's based off EBITDA. So what we did was the EBITDA is earnings before interest, taxes, depreciation, and amortization. So it's very closely related to your net revenues. Of course, that revenue can come from anywhere. Like, it didn't matter that it was insurance premium. It could be like if you have a
broker business.
Yeah, or if you have a group that people are paying for, they would count that as all part of that organization. And so our EBITDA, our net revenue, was around 6.3 million, and that was total. We had a few different businesses that went into that. So they're paying 10x on that with a 1x earnout on the back end. And that 1x earnout's tied up over 3 years. There's some other variables there, like they take $1 million, put it in an escrow account. $1 million goes into stock into the main company. AmeriLife was ours. So but those are not bad, like the escrow account earns interest. So there's a lot of variables there, but if you're looking at 3.5 gross, like let's say I would have gotten the difference in mine if they would have done a gross multiple at 3.5, it would have went from a $70 million valuation down to a 35.
Yeah.
So it'd been about half, that. So what I would probably,
and 2 books I bought were like 2.2 times.
Yeah.
And who knows? I mean, I think it depends if you're selling the operation and the operation's, smooth. What I get nervous about is if I built this book and I'm pretty removed from it, but it's still, I built it a lot through my brand, and it's not, we still buy a lot of internet leads, a lot of things like that. What about your team? Does your team leave if you leave, and that whole, I think that those are all things that you got to figure out. But back to the question is Medicare the best type of insurance to sell because is that common that you got a 10 times multiple?
I think Medicare gives a highest. I think AUM, so managed money, like series licensed people have decent multiples because it's lifetime residual. But Medicare Advantage has lifetime residual commissions, and then MedSup. But it's weird because PNC has lifetime residual too, I believe. So I don't know why it's not as high. I look at it, I think it's based on this idea. I don't know if you ever read this Boston Consulting Group thing where they categorize businesses as stars, cows, dogs, and I can't remember what the other one is. But the point of them is if you're a big company in a fast-growing market, it's called a star. If you're a big company, a small company in a fast-growing market, it is a cash cow. Mm-hmm. But they categorize them in these different ways based on the opportunity. And so I think with PNC, there was a point reached where you're at critical mass, where it becomes more commoditized, and so you have to use relationships to win as a broker, because everyone is just like, it's so rate driven and shopping and all that kind of stuff. And I think everybody has. Well, not everybody has, but everybody who's technically going to buy it has it. Whereas Medicare Advantage was in this uptick where when I started, I think the penetration rate for the country was like 22%. Now it's at 52%, and they're supposedly heading to 65 or 70%. So the way they look at it is there's this sharp growth curve. So if they buy you at 10x right now, it's technically a discount because your revenue is going to grow so much.
Got it.
So I think that's the way they look at it. Like that, and just like how big can it get? So software can sometimes dictate a really high multiple as well because of that. But I think that's why. So Medicare does have that, but it's because of how much growth potential there is.
Yeah. I remember I was messaging him like, I think I'm in the wrong line of work, but
Hey, we can always build a Medicare agency on the side.
well, when you're captive, your hands are tied, right?
Yeah.
Like there's only so much that you can do.
So Allstate, it's funny. Allstate as a company got into the Medicare world a little bit. They bought National Health or National General, which is a PNC company, but they had a National Health arm, and they started a med sub.
Okay.
So we sell an Allstate med sub.
Got it.
It's like that's their only broker product, really. That's
Yeah.
Allstate branded. So
Interesting. Well, the opportunity's still been tremendous, so I haven't. I'm still growing it, and we'll see where.
when you may not ever
life
sell
takes
it.
me.
You don't always have to sell a business. I mean, if it's netting well and it's growing, and you get to the point where you're doing like the stuff that you're doing in the business is only things you enjoy,
It's a good place to be.
yeah, it's like
I feel like there's no difference with what you're doing now. Like you were gonna buy your time back whether you sold or not. You just happened to get a nice little chunk, right?
yeah. The biggest probably benefit, really, when you look at it, is that I had to only pay capital gains taxes on that money.
Okay.
So it was like half the tax of what it would have been if I let it bleed out and earn income over time. But at the same time, like if I held on to it, of course, if I knew Trump was going to get elected, and that
You would have kicked the can down the road.
I might would have waited because we might have 4 years of deregulation and prosperity now. And that didn't. I tell people all the time, I was like, that doesn't really matter where you align politically. If you're a business owner, deregulation always makes things easier. It's just less red tape for us to deal with, and we can focus more on get more clients, make more money. So
Yeah, this is a funny question. I mean, you seem like a driven guy, so no matter what, you've stayed motivated. But when you saw that money like enter your bank account, what was like your first like wow? It's funny because. Or like everybody always makes a joke like, well, if I just had a couple $1 million, I'd go and I'd sit on a beach all day. And I don't think that that's the case, right? It's cool, fun for a little bit, and you're like, all right, back to it, because we're very purpose driven.
I think it's like if you look at it, the type of person that makes X amount of money is the type of person it took to get to certain levels is not the type of person that enjoys sitting around and doing nothing. So like, yeah, if you took a guy that liked to do nothing and gave him $2 million, he probably would sit on the beach, right? But then if you take, and then that's why like you've seen these shows where people win the lottery and like they've blown it all in a couple of years. But if I gave you lottery money, like I always used to joke before I even sold, I was like, if I won the lottery, no one would know. My businesses would just grow so fast. Like, because I'd just come in and like, I'd hire like crazy, because all of a sudden it wouldn't be real anymore. Like, if I won $1 billion, I really would. I mean, I'm not saying I wouldn't, go on yachts more often or something like that. But I go on a lot of vacations. I love vacations. We go on a lot of great vacations. I know you do as well. That's really the only thing I spend. That's where I spend the most exuberant, goofy money is on vacations.
On trips, experiences.
It's experiences, because I feel like you always have that, But like if somebody would have given me $1 billion 3 or 4 years ago and nobody knew about it, like my business would have just taken over. Like I would have started my own private equity firm and buying other businesses and stuff because it's fun.
I saw this meme. It was like, if I won the lottery, no one would know, but there would be signs like, I'll take guacamole on my Chipotle bowl,
I saw that. Yeah.
Something like that.
Yeah.
Yeah, but that's
Didn't
awesome.
you post something like that? You might have shared it on
something like that. It was
I saw the
hilarious.
one you're talking about, and it was like the smallest splurge all of a sudden.
Yeah.
Yeah.
There might be signs. So what were you doing before insurance? You served in the military, in the Marines. I guess the question I really want to ask is like, what was young Justin Brock like?
Yeah, I think,
Did you come from like a hard place which caused you to be wired the way you are, or what was young Justin Brock like?
my dad was a super hard-ass guy. My parents divorced early. Mom, gypsy, kind of like going on trips around the world, or just around the country. She started doing that when I was pretty young. kept getting married, so I had a lot of step siblings. I was frequently the oldest one. I was class clown in high school, easy B and C student without really trying, so I didn't. Always got jobs at 15, but 18 years old, I was like, I got to get out of here. Small town, 900 people in that town, the town I grew up in. 40 people graduated in my class, and I said, I'm going to go and go to the Marine Corps because coming from where I was, like that was like the big cool thing. But to be quite frank, I enjoyed the Marine Corps. I made a lot of friends there. I enjoyed a lot of things about it, but it wasn't as fulfilling as I thought it would be. So I still was kind of then entered this phase of like, what is life? I thought I was going to do the most exciting thing, and I'm still wondering what to do. And then I got married, and I had my son, and by the time I had my daughter, I got out. I tell people, I've been saying it a lot, sales was a gateway drug for me into business because like once I started selling, it was like for the first time ever, there was this exhilarating feeling of like, I got you to trust me with something that I make money on. And I helped you with it. Like I didn't hurt you. I put you in a better place. I started off as a Medicare supplement rate shopper. So I would go and I'd have direct mail cards that I'd buy from Target Leads or somebody like that. I'd go knock on the door, and I try to look as super nice and sharp. I was 26 years old. I'd look clean shaven and wearing my little tie and everything, and try to get in like a Bible salesman. Get in the house and try to get them to shop their rate. Like you're paying. You have a Mutual Omaha plan F, you're paying $250 a month. I can get you that same plan with Aetna for $180 a month. So similar to what your team does here, right? You're just a lot of times you're adding value in different things too, but you're also like, can I get you a better deal than what you're getting now?
Right.
And but it was rewarding that people would trust me and that I could help them and I could make money. And then it became like, how can I shorten this cycle, this prospecting cycle? I want to do this as often as possible. So then I started researching marketing, and I pretty much fell in love with marketing. So it's kind of funny. Like you're growing up and you're thinking, I want to do something really cool like the Marine Corps. I found way more purpose in selling insurance and marketing than I ever did in the Marine Corps.
Got it.
Isn't that weird? But it's true, and I feel like maybe it needs to be said, like so other people could. There might be somebody that resonates with because that is the truth for me.
You embraced social media early. You documented the process. I know that Gary Vee was inspirational or influential in both you and my life. It's as far as documenting the process, and you've built a strong online presence. How has that helped your businesses?
Oh, it was great. So,
and you're also you're going hard right now too.
Yeah.
Between collaborating with some awesome people. You were just on a podcast right before this, and so I feel like your story is about to really blow up based on your efforts right now.
That's the goal now is how can we take this thing to the next level? Now that the business is growing strong, I have the bones in. I love biz ops. I love scaling the business, and I want to keep doing that, and I do think that media is a big part of that now. And if you look at what content did for me, it was really just like you said, Gary Vee and Russell Brunson with like expert secrets. But Russell's talked about selling it. Gary talked about documenting it. The truth was you document it for a while, and then as you build rapport, then people will buy it. And Russell says that if you actually got into his book, like he was talking about that too in the same way, but Gary said it plainly and it was perfect. So I had success building a direct-to-consumer sales agency where I would market through Facebook ads, direct mail, different things. I hired agents and we were making money. And then when I would go, when I started online, I started a Facebook group in 2018. It's only been 6 years. But when I started that group, I just started posting super shitty videos. I was editing myself in Camtasia at the time. I'd go on and edit in Camtasia, have these awful videos, and just put them out about Medicare updates, Facebook, what we're doing on Facebook, what products we're selling, just super informational. And the agent community just ate it up because nobody was really putting out that content. And I didn't sell them anything for a year and a half. I didn't sell anything. Didn't recruit them. Didn't do anything. It was just pure content. But I think it helped that I had built a business first so that I was using it as the case study, and then I'm putting it out. And it also helped. There was a timing win because Facebook had, and this wasn't by chance. I had read an article. Mark Zuckerberg said they were changing the Facebook algorithm to support groups that you were in, show content relative to the groups that you join. So I was like, well, I knew if I can get them in my group, then I put the content out in the group, it's going to show up in their feed. They don't have to go to the group to see it. It was going to show in their feed. And that had not happened yet. That was a new meta shift. We're used to it now, but back then it had not happened. So that really worked. And then I started thinking, okay, I need to send them to other channels because I don't know if this Facebook group thing's going to work forever. So I started the YouTube side, and then I would put the content on YouTube and I would just share it in the group. And then that would send them over to YouTube. So it started transplant. So Facebook just started organically showing this group to people. And then people would share about it because they would, people would say, oh, I learned this in the Medicare. It used to be called the Medicare Gurus group. I changed it because there was actually a trademark thing. But people still call me that, and it is what it is. Like, I'm not promoting it. People can call me whatever they want. But that group was Medicare Gurus, and people would say, I learned this in the Medicare Gurus group. So then it was just getting all this organic people joining. Then in the group, we actually changed it where the questions would take, I would learn this from other groups in other industries where they were, when they would request to join, it would ask for their email. So we started building the email list, and then you'd use the email list to send them to YouTube, so you're like kind of crossing that content. And then you do more and more of that where you're trying to get them on your Instagram, you're trying to get them on LinkedIn.
This is all like, this is all actually like what people are teaching now, but you were just doing it kind of.
Yeah, I was doing it because I didn't think the Facebook group thing would stay around for long.
Yeah.
It has stayed around, and that's great. But at the same time, like YouTube has so much power. Like it has so much staying power. Instagram, I say kudos to you because you figured out Instagram better than me. It's the type of content that you do, I think, goes really well on TikTok and Instagram. That comedic, people are there to be entertained, and you're entertaining them. So that works great.
Yeah.
TikTok's different than all of them because you can do both on TikTok.
Yeah. TikTok, I notice, is when you blow up on one thing, you have to keep doing that thing.
Yeah.
And there's only so many, the few that like popped off for me, it was the guys at work or women at work, how quickly men become friends at work, how quickly women become friends at work. There's only so many different ways you could spin that. We did another variation of it, it popped off, but they like hate when you create something outside of like
what you were known for.
Saw you, and so I don't think there are people that have like blown up in something, and you can just tell that the type of videos that they're making after the fact, I'm like, they didn't really want to make this. Yeah, it was forced. Like,
I actually talked to Southern Dad. I don't know if you've ever seen him before. He's out of Louisiana, and he's a big tattooed guy, but he puts on this get up, puts a pillow under his shirt, and he pretends to be a Southern dad. So a guy, but he's like a 50-year-old. He's got his glasses on. He's always talking about making a pot of beans, but his video started going viral. He went away from that, started doing other characters. They didn't do anything, so he goes back to Southern Dad. Over time, the Southern Dad videos, and he does a lot of them, have gotten worse and worse. But they still do well in the algorithm because that's what it's like. It's paying him for that. And there's people that I think just keep coming back to see Southern Dad, the character.
Yeah. True.
So it is a way different platform than anything else.
Yeah, it sounds similar to like YouTube, like that if you had a video do well and you talked about credit card rewards, then you got to keep talking about credit card rewards because the people that followed you, they subscribe to learn about credit card rewards. So what's all this insurance crap?
Yeah.
So yeah. But social media definitely has been a big part of what we've done. So I like to ask that question, especially seeing what you've done with social media. You're a big believer in thinking big and executing boldly. Can you share a specific moment that when you took a bold risk that it paid off for you, and what lessons can others learn from that experience?
Yeah, I would say the biggest risk was when we first, out of the group that we were building, and we started building this rapport with the agents about 2 years in. So it's 2018. Early 2018, I think March 2018, we started this Facebook group, started documenting. 18 months later, it's like late 2019, September, October, we decide we're going to do an event called the Medicare Guru's Mastermind. It's going to be the first event we've done where we try to get people to buy tickets to it. So we throw it out there, and we're just going to try to get like 100 people. And the tickets were like I want to say like $147 or something. We sell 100 tickets to it. We had scheduled it for April 2020. So that's COVID era. So March 2020, I'm at the beach, spring break, and I'm still a naysayer on this stuff. I'm like, we're going to have this event. And, eventually then all the colleges started canceling school for the rest of the year. All this stuff was around. I was like, okay. Then the hotel calls me. They're like, we got to close down.
Such a horrid time.
and I'm like, oh, man. So we postponed it to February 2021. And then for months after that, we're like, are we going to be able to do this? Like we had to, the venue that we had, the hotel, that whole hotel shut down. So we had to change the whole venue completely. And we had given them money up front, and they were like shutting down, had investors were trying to get it back. And it wasn't like super expensive, but for me at the time, it was still, a sizable chunk of change. But the cool thing was because we came out of MedicareCon or came out of COVID where the vengeance, where everyone wanted to go back to events, it was huge that they were like, can you get any more tickets? So we ended up selling 270 tickets to it, the first one, instead of the 100 we were trying to do. It was a huge hit. It was funny. We went and we had a projector, like an overhead projector. It wasn't even like in the ceiling at this hotel we ended up going to. So I look back and it's like the event felt really crappy, but people loved it. And it was really the timing, I felt like. We had a big timing win because people didn't care. They were just happy to be out talking about Medicare and meeting people and stuff.
Right.
And so then we did it again the next year in Birmingham, and it blew up. And then we started doing multiple smaller events in the interim. And then, of course, last year's we were 1,300 people here in Vegas. That's 4 years in, and you're going to speak at the one in Orlando. But it is when you throw an event and people got to show up and you have to be in charge of the whole thing. Like now, I'm immune to it because I've been through it. So, and there's still, as you get close to it, you get a little butterflies like, oh, what's going to go wrong this time? Yeah. But it was, I think those are big risks, that. And another bigger risk, like when I first got into insurance, I had a thrift savings plan for the Marine Corps. It was like $29,000. I can't remember exactly how much. And it was all pre-tax. So I go to the financial advisor. I'm going to cash it out. He's like, you're going to pay a 10% penalty and taxes on this. I was like, I don't care. I got to put it all in Facebook ads. Yeah. And so I did. I put it all in Facebook ads, and it paid off big time, But there's other times too. Like I think it's good to hear that there was in 2022, I spent $240,000 in a new market on TV, and I don't think I got back $50,000 off of it. So sometimes you do some big things and then you lose, but you have to be willing to try stuff,
Yeah. So and then just kind of let it brush off if it just not holding on to it if it didn't work out. Yeah. What's one piece of advice you would give to every insurance agent listening? If you could give that one piece of advice, what would it be?
I think going back to that last question, try stuff really fast. Like I would go and take a Facebook ads course. There might be 10 lessons. I'd get to lesson 2 and I'm already like launching ads, Whereas other people would get through all 10 and they'd be like, I still think I'm missing information. And it's like, you are missing something, but you're only you don't even know. You might work without all that other stuff. And then how do you know if it's going to work if you don't try it, right? So I feel like pretty fast on speed to implement. I used to think I was pretty analytical of a person because I was doing technical ads in a space where most people weren't using like social media. It was 2014 and 15 when I started running Facebook ads. Like most people in insurance weren't doing that. Only a handful of people were. And most of the old guys out there, the old heads, they'd tell us, these people aren't buying Medicare on Facebook. Well, now we know like there's probably more ad dollars spent on Facebook for Medicare than any other, advertising medium. But when we, started doing it, like it's just speed to implement. You have to do it fast. And, there's so many people that if I just listen to, I tried that, it didn't work, that doesn't mean anything. Like when somebody tells you they tried something and it didn't work, how long did they try it? How much did they spend? How good at sales are they? I still get people, my office right now we have 21 employee agents in there that are writing business all day, and it's probably 70% coming from Facebook. We'll set up the exact same ad for somebody else, and they'll have a couple of internal agents writing, and they're like, we can't get anybody to answer the phone. And I'm like, Are you triple dialing? Are you text? Are you doing? And they'll have the same automation set up. We'll build it out for them. So when someone tells you that they do something and it didn't work, it doesn't really mean anything. You got to try stuff for yourself and figure out what works.
Yeah. So you self-generate pretty much all your stuff.
Yeah, we don't buy any leads anymore. When I first started out, I bought some. I would buy like from Precise Leads and places like that, and you'd have some good success with them sometimes. It was like one day you'd buy something, you'd be like, "Oh, this is the holy grail," and the next week you'd buy from that same lead vendor and be like, "What the hell did they just sell me?"
I feel like they have levers that
It's like the first, it's like you're buying drugs. The first time they'll be like, they give you the good stuff, and then the next time they've chopped it all up.
Yeah, I actually never heard of that analogy, but it's literally what they're doing. I asked that because we still buy a ton of leads. I generate some of my own. We crush it with Spanish leads, but on Facebook, I can't seem to crack the English code, if that makes sense. So I'm still buying a lot of leads, but would like to replace that with my own Facebook high intent leads.
Have you done a comedic like paid ad?
Yeah, I've taken some of my transition videos. We did a funny skit where one of my girls is here in the office. It's like the gecko lizard costume. Well, we don't say he's the gecko lizard costume, and he's like, "Did you know that you could say 15?" And then he's like, "What's that?" And then he gets stepped on by her high heel.
Yeah.
And she goes, "What was that?" Well, anyways, hey, look, if you're trying to save some money, give me a call for a quote. And we posted that one, and my buddy runs, Facebook ads for some of the biggest lead companies, so I know it's not on that end, but just getting the info and then calling them and just.
I think it's always a quality and quantity play. A lot of the people that are like the lead vendors they're just making some huge claim on the ad. Have you ever run into that? We ran into this in Medicare and health insurance where they'll use a huge hook and it'll be something that very few people actually qualify for. And so when you're talking to them, like you're having to sell them down from what they were actually promised, and it's
definitely some big unrealistic promise.
Yeah.
And that's what I've seen. Even when you look at other ads,
Yeah.
they're like, "Oh my God, you're paying $247 for 2 cars? Oh my God. I've only paid $47, and it's just like.
I've seen those on TikTok, dude. I've seen the TikTok ad that's like, you have 3 cars and you're paying $185.
It's just like
I got mine down to $69 a month.
Right.
What are you talking about? Is this a comprehensive coverage on or is this is the coverage of like when you have a hoopty that has no engine and you're just insuring it if a house falls on it or something? This isn't real. But yeah, I've seen that. So I would imagine you get a lot of that which it's still an excuse to call them and talk to them, and you can maybe still save them money, but it's not going to be what they were really looking for.
Yeah.
So we get that in Medicare. Because the Medicare Advantage plans have like money benefits where they'll like give them over-the-counter benefits and stuff, or just free money. But they'll advertise like the highest variation of that to ever exist when 95% of the people that you get don't qualify for that. So then you're having to say, well, I can get you, like there might be advertising $6,500 a year on a food card, and you're having to tell them, I can get you $30 a quarter. That's like completely different. Good salespeople can still close that, but and the problem too is those people will then respond to those same bait and switch ads like again, and then some other agent might change them. So it's harder to build the lifetime value of the customer up. So we always look at, if I can do marketing for the highest lifetime value, that I'm building the strongest customer. So a lifetime value minus cost per acquisition is profit. But it can be a high cost per acquisition if you go quality marketing. Because if I go and make, like the ad that you're talking about, would probably have a high cost to acquire the customer. But once you got them, they'd probably stay with you longer too. So it's kind of a conundrum of like, do I want to spend more to get the right kind of customer, or do I just want to get more customers?
Yeah. And there's different phases. I mean, for sure, I'm at that phase now where I just want homeowners and families, because, especially homeowners, because I spent my first 3-4 years getting just auto and people renters.
Yeah.
And that business has not. The data tells me to stay away from those customers. So yeah. Okay. Well, look, man, I'm gonna jump to the last question. But before I do, just want to acknowledge you, man. Thank you for your service for our country, and then also what you've done after serving in the military, which is serving people in your local level, and then now serving people all over the country. And I'm excited to see where you take it, because you're a young dude, 36 years old, and I think you're just getting started, which is exciting. So I just want to acknowledge you for that. And the last question I have is the A1 question, which is the definition of it is of the highest standards, of the highest qualities. And I like to ask, what are 3 standards that you live your life by?
Yeah, 3 standards that I live my life by. Well, in the Marine Corps, it's always honor, courage, and commitment, the core values. For us, it's, for my business and the way we've built our life, I always want to encourage people that they can create a sky's the limit attitude without leaving a trail of people worse than they found them. We have a society where a lot of times people that get ahead are viewed as people that stepped on other people's toes. And sometimes that's the case. But I feel like you can actually do great things and leave people better than you found them and still pick up value along the way for yourself. And
It's slower.
It's slower, but it stays and you can feel good about it. Like, imagine if you made $1 billion and you did it feeling like you screwed a bunch of people over. Like, would you feel good about that? I think some people maybe even get deer in the headlights and may fall in that trap, and then they come out later on realizing like it wasn't really all worth it. It's haunting their soul because most people are good people, and they want to help people. But so I would say that that's number one for us is we if we can't help you, we won't hurt you. That's kind of like a motto. We say that on the phone a lot to customers. If we can't help you, we're not going to hurt you. Another thing is I try to, and these are not like just words, but like I want to impart the idea to people that are finding success that all the things that you buy, the watches, the cars, that kind of stuff, is less gratifying than you think it will be. But experiences, like we talked about earlier, trips and the process of getting where you're going are going to be the most gratifying things. Like looking back and be like, man, look at what we've done. Look at what we've built. Of course, a little bit of peace of mind in there too. Having enough money to not have to worry about certain things is gratifying. But most of that, like the fancy stuff, is less gratifying than the experiences and the wake you leave behind you. The last thing I'm working on, we just wrote a book called Purpose After Service. I wrote a book called Purpose After Service that we're promoting. It's for veterans that are looking for purpose after service. And one of the issues I think that they face is they're thinking like sell insurance, sell real estate, do mortgages, do sell cars, whatever it is that they're getting recruited into. They're thinking, who wants to do that? I joined the Marine Corps. I was in the Army. I went to combat. I did these things. These are, things that hold weight in the eyes of, the American people. And so they struggle with it. And so I try to get them to like, look, it's not about insurance. It's not like Nick Socker's just like, I love insurance, Mm-hmm. It's insurance it's like the water we're swimming in, it's the oxygen we're breathing, but it's really about the team that I get to build around that. The customers I help is one layer of it because I'm putting them in a better spot. But then I get to build employees in that process that get to take care of their family because of a system that I put in place. Mm-hmm. So the purpose of service is about think about entrepreneurship and sales and marketing and all these concepts that I've learned along the way as things that you get to do to help other people and see other people win. And you can find purpose in that. And you don't have to get turned off to the idea that insurance isn't sexy or any other thing. It's not all about insurance, but I think that's important. It's not like when I got out, I wanted to be like, man, I want to sell insurance. I was just like, I want to take care of my family. But I fell in love with how many people I could help and how many lives I could change in that process. So,
no, I like the way you put that. The way you articulated it, which is the insurance is just the vehicle, but the skills and who you become. It's like Jim Rohn always says, success is not the destination, but who you become in the process.
Yeah.
I like that.
And I saw somebody say it like that and then say, is it the destination or the journey that's best? And then some people say it's the company you keep on the journey. So the company you keep, the journey, and the destination, they're all good, but the destination is last.
That's true. Well, look, man. How can people connect with you? Find you? We'll put your book. We'll put your social media profiles, everything in the caption. And how can people connect with you?
Yeah, YouTube.com/Justin Brock, Instagram's @TheJustinBrock, and then you can see most of that at JustinBrock.com.
Cool, awesome. Well, bro, thank you. Appreciate you.
Thank you, brother.
Yes, sir.
Appreciate you having me.